So did we find the bottom for gold and silver? I'd say probably not, but they say to never assume because it makes an ass out of you and me. Do I need to spell that out? Pretty sure that's not going to translate into other languages. If you're wondering if we just saw the bottom for gold and silver last week, well, you aren't alone. I'm seeing a lot of people suggesting that 1620 was the bottom for gold. Now, silver is a little bit different. Silver was in the 17s, but it's a more volatile metal, and I just haven't seen anyone suggest the same there. But either way, I have a feeling this is going to be a little bit of a divided topic when I say that I still don't think that was the bottom. Now, we have a lot of new information this week, and if you're looking at price trends as an investor, which I'm typically not, at least not for metals, you want to use the most current information available. And it's only been about a week since I was agreeing to the suggestion that we would see another big market-wide drop. Now, I do have a moderate idea on how that could come about. As I've mentioned a few times here, I don't think that gold will go below $1,500, but I was expecting that deeper bottom sometime between now and early Q2 of next year, and I still am. Now, popular opinion seems to be that the stock market should be going down and gold should be going up. It's maybe the divisive part. Now, I agree with analysts, though, who say that a wide-scale drop in equities markets would affect both equities and gold, all assets, really, commodities, real estate, crypto, gold, silver, everything. But the reason so many people are starting to wonder if we found the bottom, for gold at least, is the shift that came this week. Now, the shift came from real stats on dollar performance and bond yields. They fell, and then forecasted trends on interest rates, both domestically and internationally, inflation, and the continued impact of conflict in Eastern Europe. I know we're just here to buy gold, but some of this stuff really has a tangible impact on it. And if you look at interest rates, the reason those are coming up, and maybe we widen that out a little bit and just say central bank plans in general. I mean, look at what we're seeing with the Bank of England's new bond buying policies. All of that's what's leading to the price swings this week, and that makes it sting a little bit more to buy that coin that you've been waiting to grab. And what we saw specifically was some backtracking on prior plans, particularly in the UK. We also saw the United Nations warning the US and other central banks to cool it with the rate hikes. They were saying the Federal Reserve's tightening policies are squashing other currencies throughout the world, and they might be right. And that was the core of the pivot that we've been hearing about. QE and rate hike reversal, that would change the policies that are sending the dollar up, bond yields up, and gold down. Now, if those policies actually play out, right now we're just seeing a case of selling the rumor, well, gold could continue up. And if inflation numbers start to come in lower, it would actually be more likely because the Fed could then take credit for some of their efforts, saying the current rate hikes are taking effect. Larger rate hikes in the future would be less necessary. And then another path would be if conflict in Eastern Europe continues or even escalates, if European nations have trouble with heating fuel this winter, you would get the crisis bump for metals as well. So all that is what's playing into the metals prices going up this week. And if you ignored how we all felt last week and just looked at the current state of the dollar, the current yield of bonds, and the probable issues with the Russian fuel exports, well, it looks like gold and silver are only going up from here. Bottom confirmed. Now, I'm not there yet personally. I still think that we'll see an eventual pullback, and I still think it'll be between now and April of 2023. I also think forecasting a bottom is impossible. As we've seen this week alone, news changes pretty quickly. I definitely did not expect the possible shift in policy. I didn't expect the actual shift in sentiment, and that can continue to happen. So whether the bottom for gold is 1620 or 1520 or even 1420, like we heard from a few sources, everything I see says gold is up once we get past that, once we get to the pivot. And maybe we're already there, but probably we aren't. So this whole idea of calling the bottom might be a fool's errand. It is, but sometimes you at least have the sense that there's more to come. And that's what I think. I think that there's more to come before the Fed cools off the rate hikes, but I still wouldn't bet the farm on it. I'm not sure enough, and I don't think that we have to. It's more like betting percentage points against spot price, because missing a bottom by 5 or 10% even probably isn't going to wreck anyone who isn't trading derivatives, who isn't swing trading. In the case of those of us who are just accumulating physical gold or silver with no immediate plans to sell, premiums and availability are probably the more tangible issues that we're dealing with. Now, if anyone is wondering yet why I'm even on the topic, well, just to give a little bit of context here, gold jumped upward 5% in 2 days. Silver jumped 14%. And some of that has been given up already, but that just doesn't happen very often. The trend reversal was real. This wasn't the typical noise about metals surging or plunging on a change of just 2%. So these are the kinds of swings that you would expect to see on a wider policy change or on news of conflict escalation or some other crisis. This was mostly, though, on the expectation of policy change. So anyone suggesting that 1620 was the bottom would be assuming that policies will begin to change for real and the dollar won't take off again. Now, like I said earlier, if you aren't trading gold or silver derivatives, if you're not swing trading those precious metals, then a lot of this is just academic. Nothing is for sure. And it might not even matter much, but it's interesting if you're holding off picking up physical right now. Maybe you're doing that based on an expectation of a drop. Maybe you're doing that because premiums have you waiting. I mean, it does look like the U.S. Mint increased wholesale premiums, and beyond that, premiums typically increase as spot decreases. The reverse is typically true as well, since the inventory on hand, well, they paid more to buy it in a case where spot is falling because prices were higher last week. And then the reverse is true. It's cheaper if spot is increasing. So you start to see those deals. Now, a lot of that washes out in these smaller price swings. 5% and 14%, though, they're significant enough to change things. For me, I'm glad I got in a few purchases at the lower spot price. I got an Eagle and I got a $20 Liberty Head double Eagle, and I'm not kicking myself for not grabbing more. I got plenty. I also have another purchase coming up soon. I'm waiting in the new Lunar Rabbit that drops on the 17th, but that isn't about taking advantage of a price swing. That's just a release date in a series that I'm collecting. The price swings, though, I think we're going to have more opportunities ahead, and as far as I'm concerned, nothing has been corrected in the economy yet. It's more just a simple case of sentiment, and I still think there are bigger changes ahead. So this $20 Liberty Head double Eagle, this seems to be the only thing that I guess I would call a fun purchase lately, and nobody seems real impressed when I pick up an Eagle. I can't decide if this is just because some part of me is waiting for a price swing, or if it's just that there hasn't been much released from the mints lately. I don't know. I also had a number in mind that I had as a slowdown point. I guess I forget about that sometimes. So help clear this up. Let us know if you're doing the same thing, if you're holding out on purchases, either because you're expecting a price drop or because of something else. Maybe it's because the economy sucks. You think it could get worse. Either way, let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. That's a big help to the channel. Be sure to subscribe with notifications turned on if you want to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.